Good morning, everyone, and welcome to the show. Now, today is Friday, March 23rd, 2018, and what we're going to be looking at, we're going to start charts right here. Okay, so the first thing we're going to look at is Bitcoin price. We're going to go to Bitstamp. Bitcoin price has been suffering a bit this morning. 83.21. Let's see if, the 15-minute gives us a good picture, but we'll go back a little bit further. Let's try a 1 hour chart. And what we see here is we did make a bottom at 73.25. It's been downward descending, and it still is, even now, the cryptocurrency prices. It's been bearish ever since we hit that high of 20,000, and it hasn't quit its bearish pattern so far. I'm thinking that it could be a little bit of a rush to safety at a certain point when the stock market goes down a certain point. And people think that Bitcoin is a safe haven asset. Honest to goodness, they do. An awful lot of people think it's a safe haven asset, like gold or silver. And so this is why they actually might run to it in the first initial stages of the stock market crash. But later they're going to find out it's not a safe haven asset. Real safe havens are gold and silver, the real thing, the real McCoy. So let's take a look at the silver price today. Well, we got it shooting up a little bit right now. It's up 27 cents so far. And it's at 1661 right now, and it looks like it's gonna head up towards 1670 pretty soon. Might break past 1670. It might be heading right back up toward $17. To tell you the truth, we might get a little bit of a breakout in the price where it starts to head it back up into the $17 range, possibly. We have to keep our fingers crossed, on this one, because it's awful bad for going back down again. It has been all along, because the bankers have been manipulating this market, and they've got an awful lot of control over the silver market. So let's see if the Dow Jones is open yet. Yeah, she's up 97 points so far today. It's going to be a hard time for it really to go too much of anywhere today, too much up. Too much to the upside. That might be the highest to the upside we see it all day, 97 points at the start. But it is up 97 points, and it's going to be a struggle for it. We're not going to see it go up 700 points, I can tell you that, like it went down 700 points yesterday. We're not going to see it go up 700 points today. We see it go down 700 points, but we're not going to see it go up 700 points. And today might be a little bit of an up day, maybe. But tomorrow will end up being a bigger down day than today was an up day. Because this is the overall trend now. The overall trend now is bearish, where the overall trend was bullish. You can see this big lead up coming up here. This overall trend was bullish the whole way up, monstrously bullish. Now all of a sudden, ever since this decline, now we're into a bearish market. And so we might get a little up day, but the down days are going to be bigger than the up days. And this is a bear market now. I can't see it going back again to bullish because of what the Fed's doing. The only way this market will go back to being a bullish market again is if the Fed relents on their policies. So let's take a look at what oil's doing this morning. Oil is basically treading water ever since it made this peak of 65.49. It's basically been treading water the last few days. We got the 5-day chart here, and we see it made a peak, and now it's been treading water. So now let's take a look at cryptocurrency market capitalizations. Everything is in the red, except for EOS. I don't know exactly how you pronounce that. EOS is in the green. $6.76 for EOS. Everything else is in the red. What's big in the red? Who's went down a lot? Well, they're all pretty evenly dispersed. NEO is down a lot, $64.41. Everybody else is not down that much, 5, 6, 7%. We got Icon coin that's up 11%. That is moving against the grain. It's up $3.91. It must be something hot on for that. So most of the coins are in the red today. A $320 billion market capitalization. That's not near what it was when it was up around a $750 billion market cap a few months ago, you know. Bonds and rates. What we're looking at is all of the bond yields going up today. Yields are going up today. Oh, just changed. 5-year and 2 years down a little bit. Yields are falling on them a little bit. That could be possibly not boding well for the markets this afternoon. Now, the U.S. dollar index right now, 89.60. So we see the dollar's down somewhat. It's been running around 90 even, 89.59. We're not seeing any huge impacts to the dollar, but on the other hand, you got to understand they just raised interest rates 25 basis points, and no effect on the dollar whatsoever. Not even a small effect. The dollar didn't even go up 1%. That's not a good sign for the dollar. The fact that the dollar doesn't even go up 1% when they raise interest rates. Of course, you could say that they possibly priced it in. Now, we're going to take a look at Deutsche Bank. And the reason why we're even looking at Deutsche Bank this morning is because Deutsche Bank is a too big to fail bank. And what that means is if they let Deutsche Bank go down, Deutsche Bank will cascade the whole system down with it. It's got such a big derivatives book. It's absolutely unreal just how big a bank Deutsche Bank actually is. And Deutsche Bank's been having an awful lot of trouble. Deutsche Bank's basically dead. It's dead. It's a dead bank. Last time they bailed it out, they actually sold their own shares, and they used it to raise capital. And the thing is that diluted the shares for the shareholders. The whole thing's just a mess, you know. And it's been falling again, and basically they already had a bailout, an investor bailout, and they bailed themselves out by selling shares. And basically they're going to need another bailout, but this time they're not going to be able to do it the same way. This time they're going to need some sort of a government bailout or something coming up. The government has become progressively more negative to bailing out the banks and the banking system. But what we're going to actually see happen is eventually this is going to become an accepted practice again, because they're going to be forced to. And so they're going to have to turn a blind eye to what everybody thinks, and they're going to have to bail everything out again, because these institutions are absolutely too big to fail. So Deutsche Bank stock might be actually, when it gets really low, it might actually be a better buy than a lot of other things that you'd buy. Because when it gets really low, they're going to have to build it. They can't let this go down. This will carry the whole financial system, the whole world down with it. So they can't. Just can't happen. It's almost like the U.S. Treasuries would go down if they didn't raise the debt ceiling. So they have to raise the debt ceiling. They're forced to raise the debt ceiling. They're forced to bail out Deutsche Bank. They can't let Deutsche Bank go under, because the whole world would go under with it. And they would all lose their cushy jobs in these, doing what they do, you know, these academics. So now we're going to take a look at China. China is the petro yuan is going to erode once in the 26th, when the petro yuan comes in. It's going to start to erode the petrodollar. And this is really a big deal This is possibly a bigger deal than Deutsche Bank, because the petrodollar is what supported the whole world's monetary system for the last, going all the way back to 1971 when Nixon took the United States dollar off of the gold standard. Gold was supporting the monetary system of the world up until that point. They took it off the gold standard in 1971. Nixon did. And they went on the oil standard, with the dollar being the fundamental basis for the world reserve currency, and all the other currencies pegged to the dollar. So they were pegged to oil. They've been pegged to oil ever since. But now, all of a sudden, the Chinese are coming along right now, and they are going to quite literally depeg the dollar from oil. It says China prepares a death blow to the dollar on March 26th, which is like, today's the 23rd, 3 days from now. And 3 days from now, China prepares a death blow to the dollar. On March 26th, China will finally launch a yuan-denominated oil futures contract. Over the last decade, there have been a number of false starts, but this time the contract has gotten approval from China's State Council. With the approval, the petro-yuan will become real, and China will set out to challenge the petrodollar for dominance. Now, see, this whole thing with the United States slapping China with trade sanctions is not going to make China want to not do this. They're pushing China to do this even harder. But the whole reason I believe that the United States is hitting them with trade sanctions is they're trying to punish them for doing this. But the Chinese I mean, you're not dealing with an Iraq here. You know, you're not dealing with an Iran. You're not dealing with a Libya. You know, you're not when you're dealing with China. You just can't go and pull your big aircraft carriers up to the edge of China and bomb China into submission. Right? And so now, because they can't do that, they're going to come in there and they're going to basically say, okay, we're going to slap tariffs on you, China. It's basically their way of saying, hey, you know what? We're going to break you into submission a different way. But the problem is China's going to react back, and China is going to react back in a way that's negative to the United States, because China now has become, if we take a look at this chart right here, China has become the big new oil king. You know, China is the new crude buyer of the world. Look, U.S. imports of crude, right? We see it dropping, this U.S. imports of crude. Well, part of that is because the United States has become a net oil producer rather than an importer so much. But look at Chinese. The Chinese consumption of oil just keeps continuing to go up and up and up. This is this green line on the bottom here, going back to 2010. Now it's 2017, and it's almost making a vertical line straight up. It's past U.S. imports of oil. China is the buying king of oil, and now the petro-yuan is going to be what oil is priced in, and they're going to have more and more control over Saudi output, the Chinese. What does all this mean? Well, it's not going to mean an immediate death to the dollar on the 26th. That's not what it's going to mean. But it's going to mean a severe erosion is going to begin. You know? And this erosion is going to start to take away the dominance of the U.S. dollar quite quickly, actually, to tell you the truth. It's going to be very negative for the dollar and negative for all of these other currencies that are pegged to the dollar. Basically, your buying power is going to start to be eroded very, very quickly. This can only have a positive effect for gold. And in fact, it says it right here. Where does it say? The petrodollar's downfall could be a lift for gold. Amongst the trouble ahead for the dollar, there is some good news too. The U.S. might have ditched the gold standard back in 1970, but with gold making a return to world headlines, we could see a resurgence. For the first time since our nation's abandoning the gold standard decades ago, physical gold is being reintroduced to the global monetary system in a major way. That alone is incredibly good news for gold owners. Okay? But there's more. Take a look at the cryptocurrencies. Take a look at if you'd bought in at Bitcoin at, say, $17,000. Right now, you would have really nearly lost half of your money. Right? Nearly half of your money would be gone. This is how risky cryptocurrencies is. And so if you invest in cryptocurrencies even right now, it still has the same up-downside risk. The same downside risk. The downside risk can be huge. Okay, the upside can be huge, but the downside can be huge. But how big is the downside going to be for silver? How big is that downside for physical silver? I'm going to tell you. It's only as low as mining production costs, and they're almost down to mining production costs right now. They're only just very marginally higher than mining production costs. If it goes below mining production costs, what's going to happen? The silver goes below mining production costs. So if we get too much downside, what's going to happen to silver? Well, of course, the mines are just going to quit producing. So what happens to the price then? Well, it buoys back up, and now we're talking buoys back up big time. So it can't go very much lower than it is right now. It can go a little bit lower, but not only marginally. Not like Bitcoin. Bitcoin could drop down to $1. And the cryptocurrencies could drop down to $1. And there's so much downside risk, it's incredible. Just like the stock market and everything else has got a lot of downside risk. Your physical silver does not have very much downside risk. Plus, you're also got to think about physical silver doesn't have any counterparty risk of somebody else actually coming in and taking it away from you, like stocks and everything else. It's got a lot of counterparty. Physical silver, if you own the physical stuff in your hand, it doesn't have any counterparty risk. So, I mean, this whole thing is just a signal. And why I say silver over gold is, gold's good too. But why I say silver is the gold to silver ratio is skewed right now. It's like 80 to 1. It's going to go back to like 40 to 1. That means you're going to double your price just on the move in the ratio with silver. Silver is got buy written all over it right now. It's unloved. It's been unwanted for a long time. The price has been manipulated downwards by the banks. It's really a great safe haven asset right now. So listen, thank you guys for listening. Like and subscribe, and we'll catch you in the next show. Bye.